This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms. It is Wednesday, April 22nd, 2026. Carol Massar, Tim Stenovec, live here at Bloomberg headquarters in New York City. Stocks bouncing around. We're pretty close to our best levels of the session on the S&P and the NASDAQ 100. A slew of strong corporate profits lifting stocks one day after President Trump extended a ceasefire with Iran. Though attempts to resolve that conflict, well, still struggling a little bit without any signs that the key Strait of Hormuz will reopen soon. And so that's kind of our backdrop. Once again, I keep saying in the newsroom, we're kind of treading water when it comes to where we are on this conflict and kind of wondering what comes next.
Well, oil traders kind of think that high oil prices are going to come next, because even though stocks are higher today, we're also seeing oil higher to the tune of 3.4% for WTI. Brent up 3.2%, $92 a barrel for WTI. Brent, though, Carol, up above $101 per barrel.
Well, and what's interesting, you look at the S&P 500, folks, almost an even split here. A little bit more of a risk off. Almost 300 names are lower in the S&P. We're going to talk about markets, get an update for you in just a moment. Meantime, on the war, we have a former senior advisor on Iran at the State of Department. Ray Takeyh is back with us. He's going to talk about how the president miscalculated in Iran. We're also going to ask him about, is it a new normal when it comes to relations, Tim, between the United States and Iran? Because it doesn't feel like we can move from here. We're kind of stuck a little bit.
And what's the new normal for energy in this country? That's a big question that we are considering this afternoon. The CEO over at Suburban Propane is going to be joining us, talking about the war, energy markets, demand that they're seeing, that the firm is seeing in this war.
Yeah, great read on the retail, but that is their kind of big part in terms of revenues. Hey, Tesla, it's top of mind. They're going to report after the closing bell. So many moving parts. Feel like Tesla itself is really disrupting itself. All those moving parts of SpaceX and AI. Kind of top of mind for us also in the Elon universe about SpaceX buying up that AI startup Cursor, what we need to know. So we're going to do a deep dive into the world of artificial intelligence.
Also a deep dive in the world of infrastructure. Jay Hatfield, CEO and CIO over at Infrastructure Capital Advisors, on why he's even more confident in his firm's S&P 500 target of 8,000.
Yep, that's his rules. That's where we are headed. All right, let's get to let's get a check on the trading day on this Wednesday. Here is Charlie Bellet.
All right, thank you very much. And let's put that 8,000 call in perspective. 71.24 where we stand right now on the S&P 500 index. 71.26 is the record on the S&P, so just a couple of points shy right now. However, a record right now for both NASDAQ and the NASDAQ 100 index. Big tech leading the charge higher today. Going to be very interesting to see how the latest batch of tech earnings shake out after the close of trading. As Carol mentioned, Tesla will be the big focus today. Tesla shares ahead of earnings, up 0.6%. In terms of the equity markets, right now looking at the Dow at 49,407, up 258, up by about 0.5%. Got to get above 50K before we start talking about records again on the Dow. The S&P up 60, up by about 0.9% right now. NASDAQ up 1.4%. NASDAQ 100 index up 1.5%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, keeps on going up another 2.5%, with the VIX trading just above 19. 10-year 4.29%, with the 2-year 3.78%. Gold is up 0.3%, 47.36 the ounce. West Texas Intermediate crude. Interesting day for energy, because we are seeing oil push higher, surging 3.5% on WTI, 92.77, not rattling the equity market, also higher. In fact, NASDAQ at a record. Brent, 101.75, barrel of Brent, up now by about 3.3%. I mentioned Tesla after the bell. We'll also be hearing from IBM, Texas Instruments, and Lam Research. Recapping, S&P up by 0.9%. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, folks, we've been watching in terms of new developments on the war. It does feel like a little bit of a standstill. Bloomberg Economics putting out some research and writing today that in another reversal, President Trump announced a unilateral, open-ended extension of the ceasefire on the war in Iran. Now there's no peace, but no active war either, this may become the new normal. A fragile ceasefire without a formal deal, with tensions simmering, sporadic flare-ups, and oil near $100. Is that kind of our new reality going forward?
I think a lot of people would look at $100 a barrel for oil and say that is not a reality that we want to live in for a long period of time.
It's not where it was at the beginning of the year, right?
It's about $60, yeah.
Yeah, big difference.
Roughly.
So it does feel like kind of we're at a standstill of sorts, heading towards that new normal. We have so many questions for our next guest. Back with us is Ray Takeyh. He's Senior Fellow for Middle East Studies at the Council on Foreign Relations, author of several books, including The Last Shah, America, Iran, and the Fall of the Pahlavi dynasty and Guardians of the Revolution, Iran and the World in the Age of the Ayatollahs, former senior advisor on Iran at the State Department, a fellow at Yale and the Middle East Center at UC Berkeley. I could go on and on, but we know we like to talk with you, Ray. Good to have you back with Tim and myself. We are thinking a lot about, is this a new normal? It does feel like we're in a bit of a standstill. Iran knows the Strait of Hormuz is its power, its leverage. I think it's safe to say this White House wants this war over. They don't want to spend. They want to move on. There's midterms coming. Are we headed, though, to a new normal, which comes with new metrics on energy markets and more when it comes to the U.S.-Iran relationship? And if that's true, what do you see as that new normal?
Well, if this is the new normal, I'm not quite sure it's sustainable for either country. One of the things that the Islamic Republic has learned from this crisis is they have an ability to disrupt global economies by disrupting global commerce and maritime commerce to the Gulf. And that is not going to change. One of the reasons, in my view, these negotiations are stalemated is not necessarily because of the nuclear issue, although there are many disagreements between the two sides on that. But moving forward, the Iranians believe they have a right to have a say in what goes through the Gulf and what stays out of the Gulf. And that includes perhaps monetizing their geographic position, charging tolls for various ships and so forth on some kind of a discriminatory basis, and the basis of that discrimination being politics. So they have learned that this new situation gives them leverage, a security guarantee. And unlike nuclear weapons are something that they could not really use. No country can use it effortlessly. But, blocking straight traffic is something they can do whenever they wish, as they are doing it now. So we're in a situation where status quo ante, in my opinion, is not really to be recreated. And maybe the president knows that, maybe he doesn't.
So
interesting.
If that's not to be recreated, then how does the U.S. and how do the U.S. and Iran move past this standstill that we're seeing right now?
The only way the Gulf can be secure, the only way traffic can get through Gulf with some degree of confidence of safe passage would be considerable concentration of American naval assets for a prolonged, if not indefinite, period of time. That is not a commitment that the president has asked the American people to make, but that would essentially ensure that an international waterway is operated free of Iranian hazards. Besides that, you're going to have to come to some agreement with the Iranians where they have some leverage over what gets through and whatnot. But also, there's a considerable cost to the Iranian government themselves. Right now, we're playing this game. Both countries are imposing costs on each other. Obviously, the United States can impose significantly more economic costs on Iran than Iran can on the U.S. But the question isn't the magnitude of the pressure that we can impose and they can impose. The question is which body politic is better prepared or more willing to endure that pressure? United States with higher gas prices or Iran with a crumbling economy? That's the contest. And I'm not sure if the president have prepared the public for that particular context, the way the Iranian government is trying to do with however degree of success with its own people.
So, Ray, is it more about then, it's interesting what you just said, it's not about Iran necessarily having nuclear weapons that they can't really use, but this important channel, the Strait of Hormuz, and controlling that. Is this about kind of changing their economy and so being able to charge for people who go through that and then create, broaden out their economy? I bring that up because there's so many fascinating stories on the Bloomberg about, UAE and talks about a possible financial lifeline. It just struck me as odd. I just thought this whole region was so wealthy, but we also know that they've been trying to change their economy. We had another story about the Saudi Gulf, Live Gulf, right? That they're hinting, that they, I think, had talked about getting out of it or shutting it down, the losses. They've all been trying to change their economies, evolve their economies, make it less energy and less energy dependent. Is that what Iran is trying to do?
Well, paradoxically enough, given the fact that the sanctions that Iran has to live with, 50% of the Iranian economy doesn't rely on oil revenues. So this is essentially an economy, I wouldn't say it has diversified, but it has certainly, by compulsion of sanctions, managed to essentially develop other sectors. And whenever you have 92 million people in the country, you have a domestic economy of some sort in terms of internal arrangements and so forth. But the Gulf, the ability to exert influence over the Gulf is not just in terms of monetizing it and getting financial dividends, it's also a strategic lever. It is a strategic deterrent, because the way they essentially trying to safeguard their boundaries, their border, their territorial integrity from being attacked, as they were twice in June and March, is by playing the Gulf card. And this is not just directed against the United States. I'm not sure if the United States has an appetite for another military campaign in Iran, but it's really also directed against Israel. The Israelis do recognize that the containment of Iran will require periodic military attacks. And now I'm not sure if that's in the card anymore.
But it raises the question, and to Carol's point about what happens in the region if the U.S. and Iran agree to something, but Israel's not necessarily party to that.
I'm not quite sure on the nuclear issue that can happen. The Israelis obviously have to be part of it. But in terms of the Gulf traffic, I don't know if the United States and Iran can agree to kind of ensure the safety of the traffic of the Gulf. I think that's an American obligation. I don't put that much stock into the Europeans doing so. And as I said, this is not the case that the president has made. It certainly is not the case because the American people are opposed to this war by a 2-to-1 margin. That is not a basis for sustained policy in any region, much less in a volatile region such as the Middle East.
So come back to this global insight piece that our team put out there, our Bloomberg economics team. No peace, no war, the new U.S.-Iran normal. Do we stay maybe in this situation for a lot longer?
Well, we can stay in this situation if we're prepared to absorb the costs in terms of economic penalties, gas prices, and so forth. I'm not quite sure if that's the situation. It's a particularly dire circumstances for the Europeans and for many developing countries, whether it's India, Africa, and so forth. So this is not just about the American economy; it's about the global economy. And that obviously has an effect on how American economy becomes stable or unstable. The Iranians have one advantage. Their economy is a basket case. So they're already living in sort of a primitive economic conditions. But even they have a problem because their economic situation can lend itself to political revolt. And that creates a domestic unrest problem that they would have to deal with. This is not an easy situation for any of the actors involved. The United States seem to have gotten into this war without having clear reasons why. They're not really sure how to prosecute this war that they find itself in the middle of, and no one has an exit strategy or an off-ramp that they're willing to take.
You know, you remind me of what we're going to be talking about just in about an hour. It's today's big take. It's one of the most read stories on the Bloomberg terminal. It's about satellite imaging and the destruction in Tehran that our team has been able to gather. But the economic question, Ray, that you bring up is a really important one.
Well, and he talked about, parts of Europe and Asia. I mean, Lufthansa scrubbing 20,000 summer flights to save fuel costs. So it's already, and we know there's a lot more serious stories, as you mentioned, Ray, in the developing economy. Always love talking with you. Ray Takeyh, Senior Fellow for Middle East Studies at the Council on Foreign Relations. All right, that's our latest. That's our take on what we wanted to look at when it comes to the U.S. war in Iran. We got to get to that other big topic that we were talking about a lot before the war. We still talk about it, and that is AI. Yeah,
a small group of unauthorized users have accessed Anthropic's new Mythos AI model, which the company says can enable dangerous cyber attacks. And as Tesla gets ready to report later on today, the story about how SpaceX has an agreement to acquire the AI startup Cursor for about $60 billion later this year. or pay $10 billion for the companies to work together.
He's been listening to the latest on the war, and waiting patiently. Seth Fiegerman is back with us. He is Bloomberg News AI editor. I want to start with Tesla and their kind of evolving world, and it's really SpaceX as that world of Elon continues to evolve. What is Cursor, and why does SpaceX want it?
Sure, and thank you for the education on everything.
You're welcome.
Cursor is a really buzzy, fast-growing AI coding startup. If you've heard the phrase vibe coding, a lot of that is because of Cursor. They released an AI coding assistant back in 2023, actually around the same time that Elon Musk launched his AI startup. And it really changed the way a lot of software developers think about coding. It can streamline the process of writing and debugging code. I'm not a coder.
Tim's been working on it.
Cool.
I've been trying. The vibes aren't great. Let's just say that. But I've been trying to do some vibes.
But is it just a looser way of like talking to, like figuring it out?
I think what they've done is a lot of their product is basically built on and around the existing models from companies like OpenAI and Anthropic, and sort of packaging it in a way that was particularly compelling and easy to use for developers. They have their own proprietary models, and they were looking to kind of double down on that because they also face growing competition from OpenAI and Anthropic and a long list of other startups.
I'm glad you went there because, you can vibe code with OpenAI's ChatGPT. You can do it with Anthropic.
A lot of places,
Code.
Yeah.
Yep. To Carol's point, can't you do it using tools from XAI, or they just haven't been able to figure that out?
XAI historically has done well at some things. I mean, it's easy sometimes to write off Elon as having a lot of bluster, but they did kind of build pretty quickly a compelling large language model to power their chatbot based on a lot of data from Twitter, or X. I still call it Twitter.
It's okay. You're in a
we
good
all
company.
do. I know. I'll never stop. But they have not been as credibly competitive on the coding front. And maybe you could have looked past that at one time, but increasingly we've seen that this is the revenue generator. This is the proven lucrative market for the big AI companies.
But it seems like at this point, it's turning into a commodity because if OpenAI can do it, if Anthropic can do it, if the other startups that you said can do it.
I'd say yes and no. I think there's a lot of players in the market right now, but there's still a big difference between the ones at kind of the bleeding edge, like Anthropic and OpenAI, and the rest. Anthropic every few weeks, every couple of months, puts out a product saying it can code autonomously for longer. It can deal with more sophisticated problems. It can act more and more like a senior engineer. And maybe to you and I, those distinctions aren't always immediately apparent, but it's just getting better. And so I think that's also made everyone else in that space have to play catch up a little bit. And at the moment, that's key to the enterprise strategy.
I feel like it's why, when we talk with Mark Gurman about Apple, it's like, I think to us, it makes somewhat sense of like, yeah, let's rely on Gemini. Let Google and Alphabet spend all that money and figure it out, and we'll just use it. But he seems to continue to stress, Mark does, that Apple needs to be in on AI on its own. So
there's a feeling broadly in AI, not just about coding, but certainly there, that you're seeing a handful of companies start to pull away. Now, it's not impossible to catch up there. You're watching companies like Meta who sort of slip behind, and they're spending gobs of money to try to get back in that upper echelon. But I think you're seeing Anthropic and OpenAI and Google start to pull away from the crowd a little bit.
Can we do 40 seconds? I know we're going to let Anthropic's mythos, we think it's the way it's
I say it both ways. Yes, mythos or mythos.
Is being accessed by unauthorized users. 40 seconds. What do we need to know about this?
Look, this is a product that Anthropic has said is dangerous enough that they want to limit the release of it for fear of someone using it to potentially hack or exploit vulnerabilities in every major piece of critical software. So if even one person out there has access who shouldn't, seems concerning. We're still sussing out how broad that access is.
Sounds not great, Seth.
The look Tim gave me.
40 seconds. I mean, this is what
no, but as Seth, as you described it, I mean, we're in uncharted territory, right?
Not great, Bob. Yeah.
There it is.
Do we know who these people were?
We can't say, but.
Oh, okay. Oh.
I like
Boy,
that.
Mysterious.
All right,
Seth.
follow this space for more.
Please do.
Really good. Thank you. So well. Seth Fiegerman, he is AI editor at Bloomberg News, joining us here in studio.
Coming up next, 8,000 on the S&P 500 by the year end. The Chief Investment Officer of Infrastructure Capital Advisors is next. That's on Bloomberg Businessweek Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We got the S&P 500 index very close to a record, 71.19, where we stand right now. 71.26 is the old record. Right now, the Dow pushing higher by 203, up by 0.4%. Strong corporate profits lifting stocks. The S&P, again, very close to a record, up 54, up 0.8%. Both NASDAQ and the NASDAQ 100 index are at records. NASDAQ up 1.3%. NASDAQ NASDAQ 100 index up 1.4%. The stocks, the Philadelphia Stock Exchange Semiconductor Index pushing higher yet again, up another 2.3%. All of this with a VIX just above 19 and a 10-year at 4.29%. Gold up $10 the ounce, $47.30, up by about 0.2%. West Texas Intermediate Crude up 4%, $93.23 a barrel. Brent 102.20, barrel of Brent up by 3.8%. And Bitcoin closing in on 79,000. Bitcoin right now up by 4.2%. A source tells Bloomberg the Trump administration is nearing a rescue package for Spirit Airlines that would give the government an option to own as much as 90% of the carrier once it emerges from bankruptcy. Shares of Spirit Airlines, FLYYQ on the ticker, up 221%. That news helping send rivals lower, especially the low-fare carriers. Frontier Group Holdings, ULCC on the ticker, down 12.4%. ULCC, by the way, stands for Ultra Low-Cost Carrier. Also reporting earnings today, we did hear from UAL, stock down by 6.8%. We got Southwest after the close of trading today. Southwest Airlines down now by 3.9%. Again, recapping, stocks higher. S&P 500 index right now at 7117. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie just giving us an update on the market trade. Again, hovering near some records. We certainly have seen that. We had a lot of records, or several records last week, and quite a run-up in the equity trade. And then a little bit of a halt as the peace talks don't seem to be moving forward between the U.S. and Iran.
Yeah, interestingly enough, we're seeing chip makers rising for a 16th straight day. Longest ever advance there. There are also some individual stocks making big moves, but the earnings picture, as you were saying earlier, is setting the tone that says, wait a second, investors, at least to a certain extent, have looked beyond the high cost of energy right now, and that's not at least bleeding in.
Kind of looking through or getting used to it. Yeah, exactly. Well, our next guest has a target of 8,000 on the S&P by the end of the year, so we want to talk about that. He also, among his recommendations, it includes an iconic private equity firm that has limited exposure to private credit. Those are his words. And then also another company that he calls the poster child for the rotation being overdone. So we have a lot of names we want to get to.
Jay Hatfield is CEO and Chief Investment Officer of the RIA, Infrastructure Capital Advisors. It's got about $3.6 billion in assets under management. He joins us here in the Bloomberg Businessweek studio. We got to start with the, I keep calling it the backdrop to the trade, but that's what it is. And it's high energy prices. And it does seem like traders are looking beyond the war, yet it's hard for a lot of people to say there is a clear end to this. How are you looking at that?
Thanks for having me on, Tim and Carol. Well, we do a ton of research on energy. I founded an energy company, and our first ETF, AMZA, is a pipeline company. So we have a global supply and demand model. And so the way we framed it is there's a good rule of thumb that works extraordinarily well, which is every million barrels of lost capacity is $5. So if you frame it that way, if the strait was shut down forever, then the oil price would be about $140 a barrel.
Okay.
Because, there's elasticities of demand or sensitivity and supply. And, we started out roughly at 60. And so our point since the beginning of the war is that 100 is probably going to be an inflection point, because there's almost 100% certainty at some point the strait will reopen. You essentially have every country in the world who wants to have it open. Now Iran, so we think that's a good strategy to blockade. Yeah. Probably not Russia, but that's not that important. So what we always try to do is look longer term. So at some point the strait's going to be open, and so we're bullish long term. And we were bullish in mid-March because there's a cycle of fear and greed. So greed occurs during earnings season, like now, and fear occurs when there's no earnings and you have hedge funds and other momentum investors typically overshorting stocks like KKR, for instance, in our opinion.
Yeah.
And a lot of the tech companies. So that's why we all have jobs, is that you have these inefficiencies in the markets.
So you're saying, though, longer term, you assume this year that the strait will reopen, and probably sooner rather than later, in your view, because Iran is feeling the pressure, the price. And even though we had an earlier guest who said they're used to an economy that's just decimated and having problems, and so maybe their threshold for pain is greater. there's a reality that they need the Strait open.
Absolutely. And the other Middle Eastern countries do. Pakistan wants it open. They're mediating. So we just try to stick to the most likely case and not all these outlier cases like, oh, the Strait never reopens and we'll sell all of our stocks, and then you miss out on big rallies.
I think the concern for some people is the Strait opens, but Iran continues enriching uranium, and the U.S. and Israel don't want to see that happen.
Right.
So then you're sort of back to this, what you had before the war, yet the leadership in Iran has been decapitated by whatever measure you want to use. And that economy has been severely destroyed. And you have a military operation that has cost the U.S. untold hundreds of billions of dollars tens of billions of dollars at this point.
Well, the way we see it unfolding is we do think it's a good strategy to blockade the Strait. So we actually went long the futures when they were off 70 handles over the weekend. I think it was last weekend or the weekend before. But if that doesn't work, we think that the Strait will be reopened by force, possibly using ground troops.
Really?
So that there isn't going to be a case where the uranium still stays there, that will destroy their energy infrastructure, use ground troops, and just open it up.
So it escalates.
Right.
Before it ends.
Yeah, so that would be a negative inflection for the market. We kind of saw that yesterday,
How negative, though, and how long does it last?
Because of this target and the fundamentals, which we can get into, we think it'll be a pretty shallow dip like it really was. Like actually March's activity in the stock market was super bullish, because that's the best you can do for a sell-off in the U.S. at least. Then that means that we're probably going to go higher when things settle down.
So that's why you're holding to that 8,000 target.
Well, actually, it's valuable to come on and do appearances, because I don't really always love doing appearances, so I try to have good data. So I use this thing, I don't know if you're aware of it, but it's called the Bloomberg Terminal, and you can get consensus.
Know it well and love it well.
Yeah, and it's sort of definitive because people like me use it. So, and there's a great function, SPX Index EEO Go, and I set it to annual. And I said, oh my God, of course we should do this more often. We based our 8,000 target on 350, and it's now 375, and you can even click on it. I'm doing that now. And you get this fabulous chart of what happened. And you see I guess it's the yellow line. No, it's the purple line. It just took off like a rocket. And so actually my 8,000 target is conservative based on our assumptions about interest rates. So at 375, if we get there, we're far away. Our target would go up to 8,600. Wow. So we think 8,000 is easy now, even at today's rates. And so it's critical to stay on top. And we do believe in consensus. We're not like a lot of strategists say, oh, well, we're bearish on earnings and we're going to haircut it. Like, that's the consensus. It's on the terminal. So everybody's looking at.
So to be fair, it's earnings. It's fundamentally based. You're just looking at what the companies are doing. And as long as they are hitting these numbers, like, you can fundamentally trade on them. They're giving us when they give us an update, they're telling us how they feel and how they're doing against this macro war backdrop.
Absolutely. And that's why I said be focused on the long term, because those numbers are not only not going down, they're actually going up. So why should you sell your stocks because of the problems in the Middle East?
Go ahead.
Well,
please. I want to talk names.
We'll talk names and I think people would be listening to this or watching this and they're saying, wait a second, what about those higher energy prices flowing through and affecting earnings? Because it affects the top line if customers are paying more at the gas pump, and it affects the bottom line if these companies their inputs are more expensive.
Well, that would be a disaster if we were in Europe or Asia. But in the U.S., the energy prices have come down to only be 3% of consumer spending. Yeah. And we have free natural gas. I'm exaggerating, but it's nearly free natural gas.
Carol was looking at a chart earlier today.
Yeah, they actually go down when oil prices are higher because it's a waste product of drilling for oil.
It's a byproduct, right?
Right, and so it goes down. And that's the biggest advantage you could ever possibly create. This is why the notion that the U.S. has lost its exceptionalism is ridiculous, because you can't change history. We have all those hydrocarbons that came from the inland sea that used to be there.
It's not the 70s and we're in the oil lines because we're so dependent on oil outside the United States.
And one thing that almost nobody ever talks about, we had wage and price controls on the entire 70s, which was, I didn't even realize till recently, even though I was alive. But that was a disaster. Our production plummeted during the 70s. So, we obviously don't have that. So we have production. That's why it's only $5 per million, because we're going to produce more in the U.S.
So listen, we only have about 3 minutes left here. So you do speaking of the energy sector, you like Cheniere, ticker LNG. It's up about 32% year to date. It's going to report the first week of May. Why that name in particular?
Well, MLPs and infrastructure,
Master Limited Partnerships.
And pipelines are interesting because people kind of hate them.
Yeah.
Like they never go up. They haven't gone up for 2 years. So you could say, I don't want to go into these Mo trades if we're correct about a war ending, but they're trading at really reasonable multiples. And they're going to benefit long term because actually the destruction of capacity is long term in the Middle East. So they have a great situation where everybody wants to source their natural gas now from the U.S. So they have a long-term advantage. So a good value stock, it'll come down when the war ends, but it's a great long-term investment.
You mentioned KKR earlier, so I want to give some time on your view on KKR, which is down 16% this year. There's some concerns when it comes to credit, when it comes to private equity.
And the firm has said that they've got limited exposure to private credit, but they have, limited some of their capped withdrawals on one of their asset-based finance funds because redemptions were above that.
Well, what happens in the market,
requests were
and again, this is why we have jobs, is that people say, alternative asset managers, they create a basket and they just short them every day, and KKR is in the basket. But they don't do any work and say, private credit's 15%, and it's probably the best or one of the two best financial services brands in the world. And that's important because they're going in and pitching to CalPERS. And, we could go pitch CalPERS on managing their money for 100 years and never get any money.
Yeah.
So there's only a few companies like that. So why should that trade at 10 times earnings? It's rallied, that's off the lows, but that should be a 20, 30 multiple company because they raised $23 billion last month during a terrible month. So that company's not going away. They have permanent capital and they have limited exposure. So we prefer that company to ones like Apollo that do have a lot of exposure to private credit. I
hate to do this, but we're going to do it. 30 seconds on Amazon, because you have said it is the poster child for the rotation being overdone. It does report next Wednesday, and it's up about 9% year to date. Just quickly.
So quickly, Walmart trades at 43 times, Amazon at 22 times. Amazon
That's
grows
amazing.
over 20. And so you have a PEG ratio of 4 versus 1. I'll pick the PEG ratio of 1.
Really interesting, and there's so much going on with that company. I feel like we've had so much news in the AI world, too, about what Jeff Bezos and Amazon is after. Jay, come back soon.
Great. Thanks for having me.
Really enjoyed it. Jay Hatfield, CEO and CIO at Infrastructure Capital Advisors, joining us. And we mentioned LNG. We're going to kind of stay in that space.
Yeah, the CEO at Suburban Propane, next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ 100 index, and yes, the Russell 2000 all pushing higher. Stocks getting a lift after President Trump extended a ceasefire with Iran. The S&P right now just about 4 points shy of a record, 71.22 where we stand, up 58 now. That is a gain of 0.8%. The Dow up 238, up by about 0.5%. NASDAQ and the NASDAQ 100 index both are at records right now. NASDAQ up 1.4%, the NASDAQ 100 index up 1.5%, and the Russell 2000 index of small cap shares gaining now by 0.4%. The stocks, the Philadelphia Stock Exchange Semiconductor Index up again, up by another 2.5%. All of this with the VIX just above 19 and a 10-year at 4.29%. Gold is up $18 the ounce to $47.38. Spot gold up 0.4%. On an update for U.S. stocks, oil is advancing as well. West Texas Intermediate crude, $93.01 a barrel, up 3.7%. Brent now above $102 a barrel, $102.02, up by 3.6%. And Bitcoin just above 79,000 now. Bitcoin up by 4.3%. Chip names, Texas Instruments and Lam Research will be reporting after the close of trading today. We've got Texas Instruments up by 0.9%. Lam Research up by 2.5%. We'll also be hearing from IBM, and of course, the most closely watched after the bell will be Tesla, up now by 0.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Carol and Tim, that is a Bloomberg Business Flash.
All right. Thank you so much. Charlie Pellet there with a Bloomberg Business News Flash. Hey, propane generic futures, we were checking it out on the Bloomberg, up approximately 25% since the U.S. war in Iran began. For some perspective, WTI crude futures are up about 40% since the start of the war. Nat gas down nearly 4% since the war began. We're mentioning these prices kind of overall. Right now, for those who are watching on TV and on YouTube and on Bloomberg Originals, you're taking a look at nat gas and New York crude. But we're mentioning these different prices because all are taken into account when it comes to the production and pricing of propane. We went through a little bit of a deep dive and a little bit of a
quick
energy
study
lesson. Yeah.
You could say?
Yeah.
Okay, well, let's bring in somebody who does not need a quick study.
No.
The president and CEO at the more than $1.2 billion market cap company Suburban Propane, Michael Stivala, is with us, joining us from the New York Stock Exchange. Mike, good to have you on the program. So bring us up to speed on the propane market, specifically the propane that you sell, where it comes from, how it's processed, and then also what you've seen when it comes to pricing since the war began.
Great. Thanks for having me. First of all, Suburban Propane, we're a domestic retailer of propane, and so we source about 99% of our propane right here in the good old United States of America. We're flush with propane right now. Inventory levels in the country are up above 78 million barrels, which is about 2/3 higher than the 5-year average for this time of year, and we're. Yeah, as you know, we're sort of coming out of the heating season, which is the peak demand period for domestic propane use, and so we're in a really, really good position with propane. Propane is a byproduct of crude oil process refining and natural gas processing. So we do retain a good bit of it here. We're actually producing record levels. We're almost at 3 million barrels a day now, and exports are hovering around 2 to 2.2 million barrels a day. So we have plenty of propane here in the United States.
So the propane that you sell, is it typically more, it's more so used here in the United States, more so used for cooling, let's say, than it is for cooking. So a real cyclical nature to the business.
Mostly for heating, right? Heating in the peak heating season. 55 million households rely on propane in some way for heating, home heating, hot water, cooking, clothes drying, so forth. So yes, it's a large weather-driven component.
All right. So when I was thinking about your business, and, Michael, you guys have been around for 30 years. You're at the New York Stock Exchange. You rang the bell yesterday. And so you've seen a lot of different market cycles. How much does your business really change? Or is it mostly closely tied to weather, or does economic cycles also play into it?
It's a bit of both. About 50% of our business is residential, and most of that is heat-related demand. But even with that, obviously, economic factors do affect how the consumer thinks about their own budgets and where they spend their money. So in challenging times, you can see some conservation kick in. But the other 50% of our business is providing energy to commercial businesses, industrial uses, government uses, agricultural uses. And frankly, because of the resilience of propane and the portability and the reliability, we're starting to find even more respect and more uses for propane in areas that people probably didn't imagine a few years ago. Things like EV charging stations and even small-scale power generation for data centers.
Wow.
These are areas where the portability and the ability to stand up a propane storage and deliver to that storage wherever the demand is a real advantage that we have. So
are you saying in some cases there are EV charging stations that are off the grid and instead powered by propane, or is that a backup power source?
No, that's the prime power for some of those off-grid charging stations. There's a generator behind the scenes that's powered by propane.
So interesting. I was having a conversation with someone in the newsroom earlier about EVs, and he was basically like, you're just, using carbon from a different source when you're using EVs.
Well, you got to charge it, right? You got to charge those batteries. Which is why you think about not perfect solution. Hey, Mike, one thing I do wonder, as you say that there are new uses coming in. I found that interesting. Small power for data centers. When we've talked about the power grab that's going on, a lot of it fueled by the data center growth that we are seeing. We've talked about higher energy costs overall. Does that ultimately lead to more people using propane or more businesses using propane? I'm just curious, because we've said all hands on deck when it comes to energy sources, whether it's nuclear, solar, wind, of course, carbon, like it's all going to be needed. So I wonder where does propane fit in potentially?
Yeah, we have the same philosophy. We are all about all the above energy sources to meet the increasing demands that are faced by everything power, whether it's data centers, whether it's expansion of EV charging, EV penetration, electrification. All that is still going to need energy in some form, and propane has a real role to play, and it happens to be one of the cleanest sources of fossil-based energy.
Yeah.
Because it's a byproduct of refining and processing.
So you're going to have it whether
the bad carbons are taken out.
Well, how careful do you have to be? I was telling Tim, I sail, and we've used propane on a boat, but you have to have the tanks above decks in the cockpit. You don't want the propane; it's a heavy gas, if you will, and you don't want that going to the bilge, right? Because you can blow up your boat. So there are risks. So how do those?
That's bad.
That's extreme.
I'm not a sailor,
risk.
but that's bad.
But we've been, you never put the propane down below. So I'm just wondering, does that limit how you guys can use it, or no? Because you have the tanks outside and you can kind of put it anywhere.
Yeah, I mean, first of all, we don't really like to talk about things blowing up, but
hey, I don't either. All I know is my husband, we're pretty stern with anybody, like with the propane tanks.
But actually, if you think about all the uses, and what's unfortunate is propane is not well understood, and it's really our job to do a better job of advocating for propane in the so many versatile uses that in so many settings. So it really is an energy source that a lot of people touch and are accustomed to utilizing. It is very safe. The scenario that you're talking about. The tanks, as long as nothing's leaking and they don't find an ignition source, then they're safe. Generally, we don't necessarily advocate for utilizing the tanks indoors, but the reality is the appliances that are running on propane are indoors as well. So we have safety is our highest priority. So
totally get.
There's nothing more that we take seriously than safety.
It's why we like talking. It's why we like talking to you. It's an education on this part of the market. Mike Stivala, he's president and CEO of Suburban Propane.